Let's break down those numbers now with Martin Smith from eNCA Capital. As always, Martin, many thanks for your time. Let's start with the overall market performance on the JSE. It's been all over the place, if you ask me. A little bit of red, a lot of green, with a lot of catalysts that have contributed to the week that was.
Yeah, I think you're correct in saying there's a lot of things going on, and we saw quite a sharp swing towards the back end of this week. Obviously, we had at the beginning of the week, again, fears around COVID, and we'll have that kind of over time. We've spoken about it many times on the show about it, the pricing in a kind of perfect rollout, but I think there'll be a bit of volatility around that. But then also what happened in Turkey and the firing of the governor of their central bank at the beginning of this week, and obviously that putting a bit of a damper on emerging markets. But then as the week progressed, like you mentioned earlier, jobless claims number out of the US positive, Biden's COVID strategy from last night also very positive, and then Mr. Powell kind of talking about the fact that monetary policy will still be supportive for the foreseeable future. So quite a few catalysts, and again the market pushed quite high towards the end of the day, and Nasdaq's bouncing very strongly, as did commodity stocks, somewhat on the back of commodity prices also having a little bit of a bounce on what we've seen out of the Suez Canal, and obviously halting trade there, which is another story altogether, I guess.
No, that's true, and we'll get to that because it's been very interesting to see those developments. But I want to start with Grand Parade. So it shows that people weren't gambling, Martin, but they were buying more burgers.
Yeah, I mean, Grand Parade were pretty much in the eye of the COVID storm. I mean, you've got on the one side gaming, and the other side kind of the food industry with their holding in Burger King, as well as a small holding in Spur. So it's, again, very much in the eye of the storm, and not surprising at all. It's a small cap as well, so it's kind of got tied into the lack of liquidity in that part of the market as well. So, yeah, I guess a little bit to be expected in what we saw.
So let's get to that Suez Canal story. So that blockage, I read an article earlier saying that's blocking over $9.6 billion in goods that are in transit to various parts of the world. In fact, you would have seen, if you're on social media today, that a lot of those ships are rerouting, and they're coming via South Africa. So why is this an important story? I mean, you've briefly mentioned the oil element, but what are some of the important elements that we have to take out of this particular situation?
Yeah, so like you mentioned, I think we read a similar article, $10 billion a day in goods that go through that canal. It's apparently costing the world economy 6 billion rand an hour, every hour that it's stuck. And I mean, they thought it would only take a couple of days. It's now being touted as Wednesday being the day next week that things will be sorted out. So again, there's a couple of things here. One is the commodities, which we kind of touched on. The other is just the cost inflation aspect of it, because now the cost of these goods and getting them out is obviously going to go higher. So it's going to put a little bit of kind of inflationary pressure on the global economy. So it's a very strange and very interesting story. I mean, the size of that ship is apparently the size of the Empire State Building. So, yeah, very, very, very crazy story that's kind of emerged.
Yeah, and from the looks of things, Martin, it doesn't look that they've got the kind of tools to get it back into the sea. So we'll continue to watch that one quite closely. A final one from you, Martin, just the outlook on the local unit, also having a little bit of a volatile week, falling over 15 Rand again against the US dollar. So just talk us through emerging market currencies and what we can expect to see.
Sure. So I touched on it quite briefly at the beginning around Turkey and the surprise kind of rate hike of 2% versus 1% that was kind of consensus, which led to the governor of the central bank there being fired. So you saw the lira, the Turkish currency, obviously fall kind of 20% on the day, which was a massive move. So the rand, which is often a proxy for kind of emerging markets currencies, given its liquidity profile, actually held up relatively strongly or relatively well on the back of that. So I think that's positive. I mean, we've spoken about it a couple of times on the show. I think around about the 14.50 to 15.20 kind of range is where I think we'll see the South African rand kind of float between throughout the rest of this year. And again, I think it'll just be driven by sentiment. But ultimately, I think that's kind of where we'll be at for the majority of this year.
Martin Smith, as always, many thanks for your time this afternoon. That is Martin Smith from eNCA Capital. Sally